Cold. All right, we're gonna get ready to start. Let's wait for viewers to come on. People should be able to click in. All right, hello. All right, so let me just respond to a few people that my chat that I put says that my Google Hangout starts tomorrow. But we are here, so just give a few more minutes for more people to log on to the scene. We are live. Let's see anything else. People are commenting. Let's see. Okay.
Welcome, everybody. Welcome.
Hey, guys. Hello. We are going to be starting in the next few minutes. Let's see. Just a lot of people are thinking because I scheduled a live broadcast that's for tomorrow at 9 p.m. So just make it ready to everyone. They could still get on and still see us.
I am very soft-spoken.
Yes.
Notice that.
All right. So, I enabled questions. So I'm going to see if you guys have a question, if I can answer you. I enabled it in here. So we're going to see
if it actually works and she did it right.
Yes. With computers, I'm not the best in.
We're savvy at some things, Meryl.
Okay, let's see if I can minus this question. Oh, right here, Q&A. Where is it? Can someone type
a simple question?
A simple question, because I just opened it and I want to see if it works. Where it says Q&A, I enabled it. So if someone can have a question, I can literally see what you guys are typing. So you guys can respond. Someone write a question. Any of my viewers on, if you guys can write a question. Oh yeah, right. They gave me $150. They gave me another $100 one. I upgraded my my internet speed. I had 75 over 75, but I wanted to make sure I never lagged with you guys, so I upgraded to 100 over 100. That way, my webinars, there shouldn't be any lagging with files. So I don't see any questions. It says, ask your audience to submit a question. They will appear below. I don't see any questions.
Submit a simple hello.
I just want to
have
see
to be a question. We just want to see
if it works.
Appears,
yes.
If it works.
Just let me know, guys. I don't see questions.
I don't see anything.
No. Okay. Maybe it's not working. Let me see. Let me see. What is this? I enable showcase, Q&A, cameraman. No, I enabled it. Let me see here. So how would I be able to respond? Let me see. Oh, I see the comment section. Here.
Well, maybe they're shy. Maybe
No. He's saying he's watching us right now. It says where it says Q&A, it's supposed to come up on my screen to my left.
Right.
So where it says comment, I guess when you leave a comment on the video, it's supposed to show here. I'm having someone try it out right now. Just bear with me, guys. I just have somebody doing this right now. Because it's really important for us to engage as much as possible. Because if I'm talking too fast, or if you don't understand something,
which usually does,
I talk fast. So you guys can stop me, like, Kim, slow down. I couldn't hear you, or can you repeat this again? Or Melissa.
I talk like a normal.
Okay, so hold on. Somebody sent me a picture. Can you write a comment, Ronald? And just like write where it says, well, you told me the comment section, just write something, hey, or something, and see if it pops up here. Oh, I enabled this. I'm so excited for this part. This sucks, man. Let me see. I'm sorry, guys. Unless you want to talk, engage with people while I try to fix this. So the guy's writing.
Sure. Actually, let me go and grab something because I do want to talk about this real quick.
He just comments in the.
Now, for my ladies, this is not Forex related because we're going to talk shitload about Forex in a second. But for my ladies that are watching, so my birthday was the 19th of August, okay? So I went to Ulta with my Ulta gift card that I got.
Maybe the chat.
Really? I'm like,
hold on.
Engage into a very
but this is important
story.
Okay, guys, I just wrote in the group chat where it says that blue thing. And I want to know, did you guys see my comment? I put, hey. Ronald, if you can see me on the left, it's like a blue little, it says chat. And I typed hey to everybody. Did everyone get to see that comment? If not, I guess it just doesn't work.
If not, she's thinking about it. But I went to Ulta, right? So I love this Anastasia Beverly Hills lipstick. And this is just for the ladies. I know men don't care, but my lips look nice, right? But what I absolutely love about this, it's a sugar plum liquid lipstick in matte. But what I love about it is that I put it on before I left my house, which was at about 7 o'clock. And I ate, I drank, I've had like 4 cigarettes, and it's still there. It's very, very, very tinted. And I'll actually have it on all the way until tomorrow at some point in my day. Like, I've even wiped off lipstick. And the color is still so bright, and it still has so much tint to it. So for my ladies, Anastasia Beverly Hills, this is a sugar plum. I actually have a few other of her colors. But it's just awesome. Her lipsticks are absolutely awesome.
All right, guys. So people are telling me that they're typing comments and it's not coming up here. I don't know what to do with this YouTube. I mean, it is enabled, as you can. I can see me writing. I can see, but it's not. But
we'll figure it out.
We're going to start and get the ball rolling. I want people to understand trading is a mindset. It's all in the mind. It's all. Don't gotta take your emotions out the door and really learn the psychological mindset of a trader, right? And I gave you guys some books that I recommended last week. I got some emails of people who actually got the book and have said that it's definitely helped them with their trading and helped them understand certain things that they were having a glitch in understanding. You know, when sometimes you see something like 10 times and it just doesn't click to you, you're like, why am I not getting it? And then you read something so simple, you're like, is this it? Voila, this is what it was, what I was struggling with. So
that happens a lot, guys.
Exactly. So
much in trading, definitely.
Please read those books that I recommended. I mean, I've got at least 20-something emails of people thanking me about how amazing those books are, and it's only been a week, guys. So definitely we'll be posting the books on the whiteboard. But I just want you to understand that trading is not a game. It's not gambling. It's not a guessing. It shouldn't be high risk if you're properly doing it the right way.
And it's not a scheme, most importantly.
Definitely. So we're going to start, and Melissa, I believe, goes first, right?
Yes. We are going to go over the homework
as
quickly
first
as possible, and really just go over it. I've been able to read some of the homework assignments, the ones that I have read. They were excellent. I give you guys names, but really, like, I don't even remember. I read them this morning. But we're gonna go over margin and margin trading, and just to prove you guys, like, I know Kim and I, you know, we have a week to prepare these, but I mean, the amount of notes that we gather for you guys, and I mean, for me, I'm a person where, I know how to trade, but now I'm teaching you guys, and I want to make sure that I'm getting the most important points, the most valid points, the most necessary information that you need. So I take notes just like everybody else. I write them down because I want you guys, I don't want to diddle daddle and the non-important stuff of Forex. We want to get straight to the point, teach you guys the most important things, and move on. Take it, make your notes, and let's go, right?
That's right.
So not to make margin boring, because everybody's like, okay, what's your margin? Well, obviously, in order for you to even place a trade, why is this so far?
Oh, God, just move it up.
Did a little bit of a moonwalk right now. Okay.
I
So-
think that's too far.
Too far?
Yeah.
And then I like cut
There.
off half the board.
No, you just move it.
Oh!
Hold on.
Sorry.
Wait. What? We're here. Okay. Sorry.
Sorry, guys. Bear with us. Like we said, we're not too high-tech savvy, right?
That's
We're not
right.
too tech savvy. Okay, so your margin, right?
Okay, get all
Margin and margin trading.
Get all the markers.
Okay, so you need a brokerage account in order to trade, right? So you pick your brokerage account, right? Now, this is going to tie into leverage. So Kim is going to go on literally right after I explain margin trading, so she can explain leverage to you guys, and that's going to tie in all in all, okay? But basically, you need your brokerage account to even place a trade, right? But now people ask, how are you able to trade? Like, okay, our US dollar converts into so many euros and so many Japanese yens and, you know, so many Aussie dollars. So obviously a dollar to us is not going to be a dollar in Australia. Our dollar carries a different value over there, right? And that's all depending on where the market is. The market fluctuates day in and day out, every second, every minute of every hour of every day, right? So in order for you guys to trade such big accounts, right, you're kind of borrowing money from your broker, right? So let's say you start off your account with $500, right? And in order for you to place that trade, your brokerage account, right, turns these $500 and gives you a loan, right? Kind of a loan that they do not charge you interest on.
That's
right? But now they're giving you this loan to allow you to place a trade to buy, you know, let's say 5,000 euros, right? Which is not going to cost you $500, right? But you were able to buy $5,000 worth of euros because of margin trading, right? So now the only way that this is now going to make sense is if Kim explains leverage, right? So hold on, before she even gets on to explain leverage to you guys, I wrote some points down. Let me see if any are actually really.
Can I erase this?
Yeah, you can erase it while I go over. Just, I told you they do not charge you interest on this money that you've already borrowed. But if you place a trade, and let's say it's on a Friday morning, right? And then 5 o'clock comes and you didn't close out your trade, it's going to carry on into Sunday, right? So when you open up your MetaTrader 4 on Sunday, you're still have an active trade. But guess what? And this is dependent on every broker is slightly different. So check with your broker. But when you leave a trade open like that, even next day, it's going to charge you a rollover fee. And that's not with every currency pair. So definitely check. This is specific to your broker. Okay. And you can also check the currency pairs. Let me see. I told you guys the way that you're able to borrow money, to trade is because you're being lent money from your broker. No interest is paid. Your rollover rate. Yeah, so that's basically it. Now, in order to understand how you can margin trade, how that's even possible, we need to go over leverage. Because when you open up your brokerage account and you pick your leverage dependent on you, yourself, and how much money you're depositing into your account, this is important, okay? Because this is what allows you,
these are ratios,
to margin trade, okay? So Kim can go right into leverage, and I'll be back.
So this is leverage, and these are the different ratios that certain brokers, U.S. brokers, are very strict. That's why a lot of people use international brokers when it comes to the forex market, because you're able to use a higher leverage. Now, we remember, the higher your leverage, the higher risk you're going into as well, because now you can over leverage, and once you're in negative, it can take you out once it hit a certain margin level in your trading account. So be very mindful with these ratios. So basically, leverage allows traders, right, to open more positions, more lots, more contracts, right, with a small amount of money, right, and what they're able to afford. So if you wanted to leverage 1 to 150 versus 1 to 1,000, you're going to leverage a lot less. This is going to be a more conservative amount, then this is going to be more like a higher risk amount. So you're able to lose more money here before it kicks you out, before the broker hits its margin level and you reach your margin level because you're, say, $200 negative in a trade. Okay, well, if your ratio is 1 to 150, it won't even reach 200. It would take you out. And an example, if you're negative $75, right, with a higher ratio, it's going to let your account hit more negatives as opposed to 1 to 150. So a lot of people, use 1 to 500 ratio. It's a lot safer. 1 to 150 obviously is going to be a lot harder to make more money as opposed to 1 to 1, the leverage 1 to 500. But basically, that's what leverage is. Leverage is a broker allowing you to use a higher ratio with the amount of money you starting with your account. So basically, like Melissa said, it's like a loan, right? So you're going to be able to get more. You're going to be able to get into more trades, and potentially our goal is to profit, right? Enter, exit, and profit, right? Those are what our goal is as a trader. So you want to enter the trade, right? You want to enter the trade. You want to exit the trade. And the goal is to profit the trade, right? Well, not all the time does that work, right? So that's why leverage is an advantage alongside with margin. So we're able to open more trades. And once it hits a certain level, you can actually remove yourself from the trade, or your broker is, once it hits a certain level, it's going to remove yourself automatically out the trade. So a lot of people ask me, oh my God, Kim, what happened? My trade disappeared. I didn't even close out. And then I see, well, what was your margin level at? Well, how many trades do you have open? What were your lot sizes, right? And that's just something that we're going to go in next to better understand. So I tell people, brokers are allowed to take you out of the trade once it hit, and that's there in place to protect you
and themselves.
Okay, so this is basically a quick review. We're not going to sit long with leverage, because I tell people, if you read the books and educate yourself on this, and once we start doing the live trading later on, you guys are going to understand this.
But guys, while she's erasing, understand that when you're opening up your brokerage account, and you decide to open up that brokerage account with a certain amount of money, whether it be $100, $200, $500, you want to do your own research. You want to do your research on your broker, on what their policies and procedures are, on their leverage. You want to pick the best leverage for what you're trying to do, which is why before you even start trading, you need to set goals for yourself, set up a trading plan.
Okay. So I'm going to be writing a lot on the board right now. We're going to go now a pip, right? A pip is the smallest amount in a unit, right? It's usually the last. I'm going to go over. I'm going to show you right now. So it is the smallest amount in which the value of the currency pair can change, okay? So we're going to do pips right here. So let me open. Can you open your phone? Let's look at what the euro's at, so we can go show.
I don't have my MetaTrader set up. This is in a phone.
Okay, well, just open one. Just do it, and then you're gonna start like this. Open that so I can get this done.
Okay, Euro USD.
Percentage of point.
Right now it's at 1.
Pip, remember that.
1.948. Yeah, 1.11.
1.11.
958. Sorry, it was going up.
958. And then put this here. 1.158. And it's always the fourth number after the decimal for a pip. So I want you guys to write this down when you go open the euro, USD, I call the EU as for short for abbreviation. And when you're looking at it, and it's the per pip is the percentage of the point in point. Okay, so we have 1.11958. It's the fourth number after the decimal. So I'm gonna write this number here when I'm going to lot sizes, and I'm gonna show you how much money you can be making according to your lot sizes with this number. So I'm going to erase the pip right here.
Wait, just really quick.
Yeah, come on.
To cut you off.
Yeah, go.
But okay, guys, you see, each broker is different, and each broker will read the currency pair differently. This last number, like she said, the fourth number after the decimal, that's your pip, your point and percentage, right? This fifth number, which you won't see depending on your broker, in the currency pair, this number is your pipette. It's like a fractional point, right? So people get confused when they see this and they're like, oh, well, it went up from 1.11958 to 1.11959. So that's a pip. Incorrect. That's your fractional pip. When that fourth number moves from a 5 to a 6, a 7, that's your pip. That's a pip going up another pip. Okay, just to be clear. So when you're reading your currencies, you're reading that fourth number, that's your pip. That's if it went down, if it went up, you'll know how many pips your trade went up or down. So do not get confused by this fifth number. This is a fractional pip.
Yeah, you could just pretend. When I trade, I don't even look at it. Honestly, when I trade, I don't even look at it. I don't even use it. I'm going to show you. We're going to go over different lot sizes. So let me erase this. Melissa, give me that number again so I can write it.
1.
Hold on. And this number is for the euro.
Euro USD.
USD.
Might have changed now.
1119.
1.11958. Yeah.
Okay. That's it. It obviously changes every
Second.
Every second, guys. But I'm leaving this because I'm gonna use this as an example when it comes to lot sizes. So people say, this is basic. Well, I have a lot of viewers that are on that are new to this, okay? So I need them to understand the basics because it's like baby steps, right? You crawl before you walk, correct? So you gotta crawl, walk, and run, and then you start sprinting, right? Or even back, you can even jog, then sprint, right? So this is just an example. So I tell people all the time, oh, I'm trading. I ask them, well, what's your lot size? Oh, I'm trading a penny. A penny? Well, I'm trading 2 pennies or 5 pennies. And I'm like, whoa, wait a minute. What is your lot size? Let me look at your MetaTrader 4, whatever platform you're using, and let's see what it is that you're actually looking at. So I tell people, no. We're gonna go with this the right way, okay? 0.1, it is equivalent to 10 cents per pip, meaning every movement that goes up or in down direction, correct? So we're doing buy or sells, right? Short or long. Okay, these are different abbreviations in the trading world and what people can use to signify if the market is going down or up, an uptrend or a downtrend. I can use different words, right? So for every movement that the market goes up 5 pips, 5 full pips, not 5 micro pips, and I'm going to go over that as well. So if someone says, Kim, I'm trading 0.1 and I'm up $1. Okay, well, if every pip equals 10 cents, that means that the trader is up 10 pips. If you want to calculate how many pips did you win or lost, well, if you know your lot sizes versus what equivalent to a pip, then you know how much money you're up or down, okay? So another example would be 0.2. That is 20 cents per pip. So if you're up $2, right, you're going to be, so for every 10 pips here, it's basically double for 20 cents. So it would be, you would need 10 pips, because 5, it'd be, so 5 times 20, it is going to, So if somebody's up $2.20, you're going to need 20, 40, 60, 80, 105 pips. Okay? 5 pips to gain $1. When you're at 10 cents, you're going to need 10 pips. So you're going to need half of what you needed for 10 for 20 because it went up double from 10 cents to 20 cents. So that makes sense. So if the person tells me, Kim, I won $1, okay, right? Just say $1. I'm at profits at $1. We're keeping it simple. That means that they're up 5 pips. So you can see the movement you went in and the movement that you came out of. So you can see by using the 4th number and what direction that the pip was moving, okay? So you're gonna need, so for example, 0.5 equals 50 cents per pip, okay? So that means you're only gonna need 2 pips to go up $1, okay? 2 pips. Here, you needed 10 pips. Here, you needed 5 pips. Here, you needed 2 pips to make all the same profit. Every profit here was $1. We're keeping it simple because simplicity is easy. We don't want to overcomplicate things. So for you to make $1, okay, you're going to need 10 pips here, 5 pips here, and 2 pips here. Why? Because you're trading at different amounts. These are considered different lot sizes. Now, the ones that you see on Facebook, right? We call those the millionaires, right? On Facebook, the people that are millionaires on Facebook.
Yes.
Okay, they trade standard lots, $1. Now, people think it's $1. No, it's not $1. That is $10.
That's margin trading with leverage.
That's right. That's $10 per pip. So when you're trading 1.00, you're actually trading $10 per lot. Okay? So if it moved 1 pip, you gained what? $10 equals 1 pip. If you want to make, oh, Kim, I made $100 today on a 0.100, but I wasn't sure how many pips did it move in the direction. Well, I said, well, it's $10 per pip. That means you gained 10 pips and you made yourself $100. So that's why on Facebook you can see someone win $1,000 or $500 in seconds because they're trading really, really high standards. So you're supposed to have a good amount of money in these accounts to be trading at that amount. Now, I'm not expert, nor am I licensed, so I can't really suggest you on what your account size could be, but I can go over on what I've seen and what me and Melissa use when we trade. That's the only thing advice that I can legally give you. Now, what else do I have here?
That's it. Lot sizes.
Yeah.
Now we just go over. I gotta go over bid and the ask price.
And let me just show them. Let me just show them this real quick.
Yeah.
Okay. Now, I hope you guys are getting this. I wish I had the questions here so you guys can answer. There's micro, mini, okay. And what we have here, there's standard. Okay, so we have here, micros are the 0.01s. Those are the ones that we told you that are 10 cents, right? Then we have the minis. The minis are 0.10. 0.10 is $1 per pip. This is 10 cents per pip. Then you have your standard, that's 1.00, and that is $10 per pip. I don't know if it's easier for you to see it like this if you break it down like this, so you know if you're trading micro, minis, or standard lots. So this is an example of what they will look like. If I need to get closer, I will get closer. So I hope this really, helps in just seeing, because I'm a visual learner, so I learn by seeing more than hearing. So if you guys want to take a picture so you guys understand what level, what lots are you guys actually trading. And remember, risk management is key in being consistent, a consistent and profitable trader. So I always tell people that. Let me erase this. Give me a second. Oh, you're going to go over about never risking what percentage on the accounts? Or you want me to show them what the 3 open trades, what would look like?
If you want to join me while I do risk management.
We'll do that.
I'm going into risk management right away. Right
Okay. So Melissa will be going over risk management. So you're going to be up next?
Yeah, but I want to go over bid and ask price really quick.
Okay, let me erase this.
Thank you.
I could have done it. I'm just going to keep this open if you don't mind, and we won't have to have the number for later for them. We're going to use this for risk management. All right, should be good?
Yeah.
All right.
Sorry.
Okay, guys, right? So obviously Euro USD, every currency you're going to see is quoted in 2 pairs, right? So I actually wanted to take a live quote to the GBP USD. GBP / USD. Guys, my MetaTrader 4 is actually open, so this is you can't really see it, but it's a live quote. So 1.31. It keeps fluctuating. Crap!
This thing keeps moving so fast. I can't get every time I look, I'm not getting the same numbers.
Okay. Right? So you're going to see 2 numbers, right? So we already talked, I wrote the last 5th number small, right? Because it's a pipette, it's your fractional pip, right? So now this is considered the base quote, or the base, and this is considered your quote currency, right? So this is actually your bid, and this is actually your ask, right? So now the difference between these 2, right? You see 3123, 3125, right? That's 2 pips, right? So the difference between these 2 numbers is your spread. And in this example, you have a 2 pip spread. Okay? Another thing to know is that your bid price is usually lower than your ask price, right? So now your bid price is the price in which your broker is going to buy the base currency and sell the quote currency. So in the ask price, it's the reverse. It's the best possible price. The ask price is your price that the broker is going to allow you to sell to the market, right? And buy, that was confusing. Bid is the best available price at which you will sell to the market, and your ask price is the price in which your base for quote currency will sell the base for quote currency, right? Does that even make sense? My own handwriting, Jesus Christ. Okay, yeah. So your ask price is your best available price that you will buy. Did that make sense? Did that make sense?
Didn't ask.
You wasn't even listening.
No.
Okay, so kills me. I'm here listening to her talk to you guys and thinking of things to add, and she won't even listen to me talk.
Sorry,
What kind of friend is that?
I was writing to the people who had questions of what we were going
Sorry.
over.
Okay, so should I explain it one more time? To make sure
Yeah, simplify it for yourself.
Okay. Oh my God, sorry, my foot itches, guys. Okay, so I looked at the GPB USD quote, right? I told you this is your first currency listed, that's your base, which is also your bid, and your second is your quote, which is also your ask, right? And then the difference between the two, which in this case is a 2 pip spread, is 2 pips, that equals your spread. So I'm just gonna read this, hopefully it does make sense. Okay, your bid, which is right here, okay, is the price at which your broker, whichever broker that is, will buy the base currency. So it'll allow you to buy the GPB, right, at that price. That's the best price you're going to get in exchange for the quote currency. And then, so the bid is the best available price at which you will sell to the market. And then your ask price is the price in which your broker will sell the base currency, okay? We'll sell the base for the quote currency. Sorry, that's where I was confusing. And your ask price is the best available price that you'll be given to buy. So hopefully that makes sense. Or to simplify it, remember that whichever pair that you're looking at, whether it be the Euro USD, the GBP USD, the AUD JPY, you are simultaneously buying one currency and selling the other. So this price, okay, whichever exchange rate each currency has, that's the best possible price at that given moment, whether you're going to buy or sell. That's the best possible price that you could buy or sell at. Okay, and that's the price that your broker is allowing you to do so, and that's the best. Okay, so now you can join me for risk management. Where is the eraser?
Right here.
Blind even with glasses.
Risk management is so important, guys. I cannot emphasize.
It is so important. Hold on.
Without risk management, you are nothing.
It is so
trading.
important. It has 2 pages worth of notes for you guys because I learned some cool stuff during our time off. So, and I went back into my notes and I was like, okay, this is really, really good. So I just sounded like my 4-year-old. She says that now for everything. Everything is like, it's super cool, or it's super hot, or everything is super, right? It's super. So I'm sorry, I just had a bonding moment, guys. But I had learned some really cool stuff, so I wanted to make sure that I shared it with you guys tonight, right? So, and Kim loves talking about risk management, which is why I'll even allow her to join me for this, okay? So risk management, why is risk management so important? And a lot of people that start trading Forex blow their accounts. And I know I've had people that have asked me, how have you never blown your account? Well, because I don't like losing money to begin with. I'm a very, very stingy, frugal person, okay? Coupons, I love all of that stuff, okay? I'm very frugal. I don't like losing my money. So if I can save money, that's what I'm gonna do, right? So when I got introduced to Forex, I didn't just pick a broker, load up my account, and hit place trade. No, I did research. I wanted to know what I was doing, risk my own money. That's why I say if it hurts you to lose money, because I know it hurts me, and you don't want to lose money because people get attached and it's an emotional thing, don't trade live, trade demo. Just don't even waste your time, because you're gonna blow your account and then you're gonna get all upset and but it didn't do this right and it did this and blah 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 blah. And you know what? Frankly, you just didn't properly use risk management. So some of the things that you can do to properly use risk management, okay, is setting up stop losses, take profits, and limits. And now, why is this important? You know why? Because initially, you shouldn't be risking anything more than 2 to 5% of your account. Okay, so if you go into a trade, right, wouldn't it be better if you knew exactly how much you were going to lose and how much you were going to make? Right? But people place trades, they don't even know if their lot size corresponds to their account that they have. They don't know how to use leverage. And then they certainly don't abide by the 2 to 5% rule of risking your account. Okay, I don't know if I'm going to need this anymore. But, all right, so I told you guys, okay, the take profits, limit, stops. That's going to enforce a risk or a reward, right? And for me, I would rather know going into a trade that I have the potential of losing $10, but I know that if my trade goes the way it's supposed to go, the way I want it to go, the way I've predicted it to go through my analysis, I'm going to make $80, right? Because that's what the point of your stop loss or take profits and your limits are. It sets almost, if you want to think of it as barriers, okay, for your trading. So personally, me, I like to use a ratio. Stupid eraser. Why do you keep moving it?
It's right
Oh,
there.
it's right in front of me, literally. I'm so blind, even with my glasses. Forgive me. Okay, so I like to use the ratio of 1 to 1 or higher. Okay, so, and then what that does is it makes sure that, not to make sure. What you want to make sure of is that your limit is at least as far away from the current market price as your stop. I'll repeat that. Use a ratio of 1 to 1 or higher, okay? And make sure that your limit, okay, your limit is set at least as far away from current market price as your stop, okay? Now, if you're looking to make larger profits, when the moment is right, because you don't just wake up one day and say, you know what, I'm gonna make $5,000 trading, and you're gonna go in and meditate for, and you're gonna place a trade, and then it's gonna be blue, and you made $5,000. It doesn't work that way. Okay, that's for the people that think they know how to trade and they play with their demo accounts all day with lot sizes of 0.82, and then they're showing the wins.
Well, five.
They don't even have $25 in their bank account. So there's no way you're trading a lot size of 0.82, okay? Let's get serious.
It's misleading.
And don't get me wrong, there is nothing wrong with demo trading. I know I started demo trading. I know you started demo trading. But you know what I would respect 10 times more is if you're showing me your demo account and you're saying, hey, this is my demo account. I put that I started with $500 and this is my history. Look, if I had been trading live, I would have made this, this, and this, and this, and this. I would respect that a whole lot more than you showing me a fake boo-boo ass demo account and you're trying to tell me that that's live. It's false advertising.
It's giving people false hope.
That's why people are saying, oh, the trading, it's a scheme.
It's not
a scheme. It is absolutely not a scheme. Anybody could do this. Crap, my 4-year-old placed a trade on my account. Luckily, I caught it. I was able to get out of it, but it happens. You know what I mean? And you know, guys, something I have to tell you guys is if you're not properly using risk management, you can blow your account in one trade, in 2 trades. It's that simple. It's not easy to blow your account. That's why so many of you have, right? Okay, and that's why you're here. So what else do I want to tell you about risk management? Okay, when you're looking for to make larger amounts of money, place your trades in smaller increments. So if normally you use a lot size of 0.25, well, maybe you want to use a lot size of 0.10 or 0.15. So that way, even if you are making profits, if you do lose, it's going to be on a smaller scale than had you continued with your 0.25 lots, right? That makes sense to you guys?
Yep.
Okay. So another thing that you can do is use a 1 to 2 risk to reward ratio. So for every dollar you risk, is for every $2 you sought or you seek.
Yes.
Okay. So I'm sorry, I have so many notes on risk management because it's just so important. I need to get this out to you guys. Okay, I told you guys you can blow your account literally 1 to 2 trades. I saw this quote and I think you'll really like it. Plan the trade and trade the plan.
Oh, nice.
Right?
Yeah.
And what do we tell you guys? You have to develop your own trading strategy. You have to develop your own rules. And if you follow that, you'll become a successful trader. But if you start breaking one rule here, one rule there,
It makes it much easier for the next.
bye-bye account.
That's
Sorry,
right.
and that's just the truth.
Makes it a lot easier to break your rules once you
Okay.
start with one.
Yes. So, okay, understand. Now, these are just little tips and stuff that I'm going to give you, so you want to cut in anywhere on anything that I'm saying. Now, can you turn the air conditioner on?
Yeah.
I feel like I have early menopause. Jesus Christ. Okay, understand your chart, guys. So if you're looking at a chart, right, and you know, like let's say for example, you see the chart bouncing up and down like this, very small channel, which we'll go through what a channel is. But this, which I will show you in a chart, an example, so you can see it live, is what we call consolidation.
Consolidation.
Am I spelling this right?
Consolidation.
Yeah, it looks right. Okay. So that's considered consolidation, right? So if you know that for the last 5 hours, the market has been moving between these two zones of support and resistance, which we'll go through next, you'll know that it's considered consolidating. The market's not really going anywhere. It's not in an uptrend. It's not going on a downtrend. It's kind of just stuck in this specific channel.
Stagnant.
It's stagnant, yeah, consolidates. Okay, so if you know that the market is doing this and you feel like you need to get into a trade, that you need to make money, obviously, you're going to set up your orders in between these zones, right? In order for you to even take profit, right? You need to chart out your highs and lows in this area of consolidation in order to set up a trade, a stop loss, and a take profit. Now,
There's different ways. I mean, they can trade breakouts after consolidation.
there's so many things you can trade that will take you guys through as we go along. I don't know if you want to draw anything. I'm just going to start reading.
No, I'm just going to be giving them examples of if they trade.
Strategize your trade, execute when applicable, right? Know what you're willing to lose per trade and what you're going to make per trade. That's the most important thing. Another tip is to effectively this is like my big thing. This is something new I learned. To effectively set up your stop loss and take profits, you have to use technical and fundamental analysis. There's 3 types of analysis. You have your technical, your fundamentals, and your sentimental. And technical is more based on current price action. Fundamentals more the news and all those reports that come out, the earnings reports, all that stuff. And then you have sentimental analysis, which is it's you. It's what you feel. It's what you think the market is going to do, right? So Another thing that you can use other than fundamental technical analysis to set up your stop loss and your take profits and all that stuff is moving averages. And this I thought was pretty cool. And once I started using it, I understood how to use it. It takes practice. Everything that we do takes practice, guys. So it's the most popular and most easiest way to set up your points because it's easy to calculate and it's tracked by the market. Averages including the 5, the 9, the 20, the 50, the 100, and 200 day averages. Okay, and what you do is you apply them to your chart and you determine whether price has reacted to them in the past as either a support or resistance level. And we'll go through this in charts, guys.
Okay, so
Wait, I'm almost done. Major points. Okay, these are tips and tricks when you're using moving averages. Okay, so use them in use long-term moving averages for volatile currencies such as the Euro USD to reduce your chances of a meaningless price swing that will activate or trigger your stop loss, right? So when using longer, you want to use more long-term moving averages for more moving markets, more liquidity markets, more volatile markets, and that reduces your chances of entering a meaningless trade, right? You also want to adjust your moving averages to match your target price ranges. For example, if you're looking at a longer target, you want to use a longer moving average to reduce the number of false signals. Okay, you should adjust your stop losses. Your stop losses should not be closer than 1.5 times the current high to low ratio, current high to low range, sorry. Why? Because it can execute a trade at any given moment in time. That's why it's so important to know what kind of trade you're going into, if it's a long-term trade, a short-term trade, and how to properly set up your charts so that you can properly read them and properly execute a trade. Also, you want to adjust your stop losses accordingly, like I showed you, especially during a consolidation period, right? And you want to use fundamental events, okay, like the earnings release to get in and out of trades. Because if you notice when a report is coming out, look at news reports. What's a news website? ForexFactory.com is one. If you want to look at the news and all the things that come up with all the different countries, you'll notice that there's like a high or maybe even medium news report, and you go and you look at that currency on that day and you just monitor it the whole day, you'll see that at that moment when that news report came out, it was like, woo! It was like freaking bouncing up and down everywhere. And you can trade like that if you know what you're doing. But it's important to know when to go in or out. And obviously we told you you can do whatever you want. We do not recommend that you trade anything more than,
hi Rosa.
or you do not risk anything more than 2 to 5% in your trading account, right? And that's also, which I'm sure is what she's gonna go into next. That counts even when you have open trades and they're in the negative, right? You want to take that and you want to calculate it all into how much you're actually risking of your account. Don't get greedy. We tell you guys that all the time. Right. She's rushing me, guys. Okay, so most importantly, right? She's gonna go over percentages and stuff.
I mean, it's just something small because I want to get into the live chart.
But most importantly, your risk. It's the point of risk management is to minimize your losses, okay, and the amount that you're losing. Basically, that's it.
That's what she said for the last 25 minutes, guys. 20 minutes over the same stuff. I'm going to just simplify it and just go over something quickly. If you start with $1,000 account and you're risking, she said 2, you could do anywhere between 2 to 5. I usually go a little higher than 5, but that's a preference. Doing the 5% rule. If you have $1,000 account, that means you should not pass a loss of $50 in a trade, right? So if you have 3 open trades, right? Currently, if you have 3 open trades, if you're at negative more than $16 to $17 per trade, guess what? Cut your losses, minimize your risk. It's that simple. follow your rules. If you're doing 5%, know what's 5%. You're $50. I know that you cannot lose more than $50. Now, if you say I'm not losing $50 a day, if that's your max, make sure you follow that rule and be disciplined. You're at losses. Don't try and say, oh, let's wait for the market to turn around, because therefore now you're just, praying that the market goes in your direction. And we all know the reality. That's not how it works. So simple. 50. And now if it's, say you have $500, right? At 5%, right? That changes from 50 to 25, okay? And then 3 open trades. That would be anywhere between $5 to $12. If one of your 3 trades that are open are hitting between this range, cut your losses and pass over. That's it. Just pass it out, close it, and move on to the next one, right? We don't dwell on our losses. What we can do is, from a loss, is figure out what went wrong, what did you not catch, what were you not seeing, and learn from your mistake, basically, guys. That's just as simple as that. I'm done with risk management. She went over, she gave you a lot of tips, but I want to go over some different things with you guys. So what is next on the agenda, Melissa?
Live charts.
So we're gonna do enough with the writing, and we're gonna go on the live charts right now, guys, with you. Okay? Let me move this for you. And markers here. Bring the stools. All right, guys, we're going to get into the live trade. So let's move this. Let's move this here. Just be careful with that button. And it's cool because when we're doing this, like, we're live. Like, nothing is scripted. We might make mistakes. We talk and we say certain things, but that's what's cool. It's live. If you know it's real, it's authentic.
Like the bulls and the bears.
Exactly.
Sorry.
So we're not like scripting or just making things up. Because when you're recording, you can edit, copy, fix certain
and we
things.
don't do that. We're 100% live. This is 100%
This is raw.
us.
This is us, and this is what you get.
Us goofy. This is us funny. This is us. Oh, damn shit. It's just us. It's us being 100% transparent.
That's right.
And going over stuff. And guess what? We're human. I know I'm human. I know you're human.
And we make mistakes,
and
guys.
We make mistakes, and you fumble words where, I'm sorry, but I didn't even notice that I said that the bulls where, what did I say? The bulls were sell, when obviously that's a bullish market is your buying.
Yeah, it was like a long,
and and the short
market.
is your bears. But you know what? You confuse it. Oops, my bad.
People will attack you right away.
Guys,
but that's fine.
It's simple. I'm a human. I'm sorry. I made a mistake. But you know what? If we do make a mistake, we correct it. And there's no shame in saying I fumbled or I messed up or I told you something that was incorrect. We're not experts. We're here just to share our value and our knowledge, because we are successful traders. We trade full time. We're at home full time. And that's what we want to be able to give all of you.
Yeah, maybe, we trade different things. She loves her euro. I trade forex too, but I trade other things. My big thing is futures. I became a futures girl, but maybe one day I can show you a glimpse of what futures is all about. Futures is where
exciting.
It's a very, if you think forex is
volatile,
you have not seen when you have a contract with futures. And you can't bet 0.1 or 0.5. The minimum contract that I'm in is a $10 standard lot. So it's like equivalent. So for every tick it moves, I'm making between $60 to $100. So like when you lose a lot, and when you win a lot. But that's a whole different ball game. But a lot of people have asked me on the message, am I ever going to go over futures? Someone asked me.
At one point.
One day, I maybe will go over futures and show my accounts and show you what I'm using. But for the most part, we're going to stick with Forex because this is what we're doing. We're called the ForexChicks, not the Futures Chicks. So, you know, we hope we're entertaining you guys. And please give us feedback. Like, if, you know, on
what do
our
you want to know
comments.
more of? What do you want to see less of?
Exactly.
What do you want to go over? Do you want to recap on something that you're not understanding? Whatever it is, we'll be happy to go over with you guys. So feedback is definitely
important.
Very important. It's necessary.
And we don't mind being criticized. You know, constructive criticism is always important.
Yeah,
for
don't
improvement.
message me calling me a B because you're not gonna get a nice response.
So we just, you know, we're gonna screen share. So hopefully that's successful in screen sharing. And I'm gonna open some charts and we're gonna look.
Euro.
Yeah, I have the euro open because I wanted to see where it was. So be mindful, guys, and hold on. We're gonna do the entire screen. Hopefully I don't have anything bad open. No, I'm kidding. And let's see what happens, guys. Woo!
Jokes on you.
Okay, you are screen sharing. Okay, so how do I minus?
It'll show up.
No, I need to minus.
Oh, yeah.
Hold on, guys.
Guys, as she's screen sharing, open up, if you don't already have it open, open up your MetaTrader 4.
Hold on, guys.
Go into the Euro USD.
Oh my God, what is going on?
It does this all the time when we screen share. You gotta give it like a minute.
Hold on, guys.
Wait, that's why I'm just talking while they're
Yeah,
doing
but
this.
how do I minus?
Okay, while she's figuring out how to minus, guys, okay, just hear me out. Open up your MetaTrader 4, open it up to the Euro USD. As soon as I can see a live chart, I'll tell you where to go on it, whether you want to go on the 30-minute, 1 hour,
We're gonna go. Hold on.
4 hour.
Why do you think it's not minus? Where is my Apple acting up? Hold on. Let me see if I can minus this, guys. Wait.
We're not tech-savvy human beings.
If you train me how to do something, look at something that I can do. But then when you start giving me other things, like, I don't know, my computer's been
Like
acting
how to
funny.
work her own Apple computer.
Yeah, I know. Hold
I'm
on,
an
guys.
HP user. I'm a PC user.
But I should be, but minus is always at the top, like, just like any other
Minus.
computer. Ooh, I don't want to log out. No. Ooh, no, I don't want to touch this either. Oh my God, this is, hold on, guys. Please be patient with us. Why can't I just, this should be simple minusing. Like, what is going on? Hold on, guys.
And yet it's not. Not for us.
Okay, guys.
There we go. See, we're not.
Wait,
that dumb.
but I need to screen share, right?
Yes.
Okay, hold on. Let's screen share first. All right, hold on. And then that's 3. All right, guys. Let's see. Do I have this open?
And hopefully they can see it.
Hold on. Let's open. Woo. Okay, now
Open
let
up
me
a
log
plain
in.
chart,
Yeah. I just want to, can you give me your phone? Because I want to see if they can screen
though.
it.
Oh, on my
phone
on
is
the
down.
couch. Okay, guys. So
Hold on.
open up your MetaTrader 4 to the Euro USD. And
Hold on, I want to explain something to them with that.
Okay.
But I want to go on your page.
But what are you explaining?
Hold on.
Because I just wanted to show them a clean chart to go over while we're doing this, just the open and the close of the candlesticks. Okay. Oh, she has all these damn charts set up. Okay. Kim, I just need a freaking clean chart.
I'm going to give it to you.
Alrighty.
No.
Okay, yeah. Can I
Hold
set it
on.
up from there?
This is clean, simple, and then you just make into candles. I can hear us on live. It's so funny.
Okay, that's just better for me.
I like the other color.
I like blue and green. I mean, green and red. I'm colorblind as well. Okay, guys. So these are, this is a bar chart, right? So each line, whether green or red, is a bar, right? And I don't really trade on this. I don't really even look at this. But yeah, just so you know what they are. Those 6, right? And I just want to show you, just so you know, obviously green is your bull, is your bull candlestick, right? So that's your buy. And your red is your bear candlestick, your bearish, your selling candlestick, right? So, sorry, her mouse stinks. Okay, so just perfect. These, oh, freaking Christ, I hate your computer. Okay, so I want to focus on this this green candlestick and this red candlestick, right? Side by side next to each other. Now, the little sticks that you see at the top and bottom sticking out at them, those you can either call them wicks or shadows, right? So now, for this green candle, it's a buy candle, right? Or you're going long, right? You would say, okay, so this is your open. This is where your candlestick opened. And the sellers tried to push the price down, right? So that's the low. But the buyers pushed the price all the way up here. That would have been the high. But they weren't that strong, and they ended up closing just a little bit lower. So that's the open, the close, the high, and the low of the buy, the green candlestick. Your red candlestick, which is your seller, or if you're going short, right? It switches. Here is your open, right? So it opened here, and the buyers tried to again push the price up, seemingly pretty close to the previous candle, but they were unsuccessful, and the sellers pushed the price all the way down here, okay, and were unsuccessful, so they closed just a little bit more above it here. Okay, so open, close, high, low, open, and close. Okay, so that's that. So just so that you're familiar with your candlesticks, where the buy opens, where it closes, and vice versa, right? So that's the simplicity of it. You'll see up here every currency. You can look at the candlesticks in a variety of different time frames. So right now, this is the 1 minute chart, and each candlestick represents 1 minute in time in the market. Same thing for the 5 minute or the 15 minute or even the 30 minute candlesticks. Each candlestick would represent either 15 minutes or 5 minutes. In this case, we're on the 30-minute chart. So each candlestick is 30 minutes in time. And same for the hour, 4 hour. You know, each candlestick represents 4 hours and the 4 hour. And if you're looking at a day chart, each candlestick represents a day in time. If you're looking at the weekly, each candlestick represents 1 week in time, and your monthly, obviously, each candlestick will represent a month in time. So I think that on Sundays, which is not your greatest day to trade, and you're opening up your chart on a day like today, I like to look at my chart from starting with the month, and I work my way down. I don't know how you like to do it. Can you do similar?
No, I just look at my day and go to the 4 hour and 1 hour, and I execute on the 30.
Okay. So you see, we, as much as we learn this skill together, we have different trading styles. We don't trade exactly the same. We don't analyze the same. Clearly, we don't even look at the same charts. Okay. So like, so I'll go from my month to my week. I like to trade on the hour and 30-minute chart. Me, myself, you said you like to trade on the 30-minute chart.
To execute.
Okay. So what I want to show you guys is how to set up support and resistance.
It's too big and I made
No, I know. I'm going to even switch from the candlesticks where we are right now. Okay. Oh, go super small.
I think that's better.
Yeah. Okay. So obviously support and resistance is probably one of the most common tools a trader can use, right? But the problem is with support and resistance is that everybody draws them, I would say, a little bit differently, right? Because what I see as support and resistance, you may not see as support and resistance. So you have to remember that support and resistance levels or zones, they're not exact numbers. And you're going to see that in support and resistance levels, some it's going to appear broken, or you're going to come to find out that the market is just kind of retesting itself, right? So you can draw your support and resistance lines on a candlestick chart. I personally do not like to. I hate when it moves like that.
Just go right there.
Right here.
It takes you where the market's at.
I prefer to draw my support and resistance levels on a line chart. Why? Because there's no wicks. You're just clearly seeing all the dips and lows, the highs, however you want to call it, in the market. You see a nice, clear pattern. Whereas in your candlesticks, you have, the opens and the close, and you have the wicks, and that tends to confuse people when they're setting up their support and resistance levels, okay? So when the market is moving up, right? You see the market kind of consolidate a little bit, went up, and then pulls back down. This highest point considered, we're on a 30-minute chart. And if we just move it so you see completely, right here is currently where we are in the market. I'm sitting so close I can barely freaking see. Right here, what we're looking at from point A to point B, that would be considered your high. And down here,
Would be
considered your low. Okay, so now draw out different zones for your support and resistance. I have issues with this because I'm not a Mac user. Okay, so let's now draw out support and resistance, and it's this one, right? And like I said, I prefer to do this on a line chart, right? So now when you draw out your support and resistance, okay, sorry. When you're drawing out your support and resistance level, for example, right? That yellow line that Kimberly just loves. Why yellow?
to stand out to the people.
See, this freaking computer hates us. Your own
Right
computer
there.
hates you, okay? So now you have to think of support and resistance. Support is your roof, your ceiling, and resistance is your floor, the bottom. Or I'm sorry, vice versa.
It's like a basketball.
Yeah, sorry, I'm thinking of it as the opposite
So
way.
support is the floor what supports your
Yes,
waist.
support. I'm sorry, I switched it.
You
It
see?
happens.
I looked at her, I'm like, what is she
looked at me
saying?
like I'm crazy, and I was
I'm
like,
like-
oh, okay, I'm so sorry. Vice versa, guys. Vice versa. Support is your floor.
It's like
Duh.
I always tell people we think of support resistance like a
basketball.
basketball. It goes up and down, up and
I
down.
can't see you moving your arms.
Oh, yes, sir. You can't see me. We're moving on I was moving my arm up and down, but it's like a basketball.
Right.
I like to be animated.
I know. Too bad they cannot see us. So guys, yes, so sorry. Backwards. Like I'm backwards, clearly. Get me something to drink, please. I'm feeling parched. Okay, so yes, back to yes. So support is your floor. I'm sorry, yes. Support is it's what you're putting your weight on, right? Support. Your ground supports you, your ceiling is the resistance where you cannot go any further. Sorry, I'm drinking. So now here you would see, oh, well, it broke. I'm sorry, here, I'm drawing like a brain fart. You would see here like, oh, it broke resistance. when actually it did break the resistance a little bit, but it wasn't anything major, because then it broke the resistance. I'm sorry, I'm thinking you guys can see my fingers. I'm moving with my fingers. You see it broke resistance a little bit, right? Ooh, I moved it like a slight bit.
It's right there. It's fine.
Yeah. Okay, but then it started going down, and guess what? It broke support. And
draw
then,
another trend line for them to see.
well, you're doing trend lines. I don't want to.
No, draw another a zone.
Another zone, yes.
Right here. Right there. Yep. I just put it right here.
So, guys,
Push, just push,
okay,
and
there we
then
go.
you hold the bar, you move it up.
I hate this thing. It's like I'm trying to move it up, and it's moving sideways, like the whole thing. I hate your computer.
Do you guys hear this? How racist she is with Apple. Like,
No,
where my Apple
phone.
users are. Like, seriously.
But look, even you're trying to move it, and it's not doing what you want it to do.
Because
either.
my computer doesn't like
It's
you.
emotional.
We can consider these are considered zones. This is why I don't like using line chart, because
No, I just like to use it to draw out my support and resistance.
you can use that is correct. There's a lot of traders I know that I talk to that use the line charts to draw the support and resistance because it's clear. But then when it comes to seeing, they use
You
the
like to
hints.
look at it on the candlestick chart. Yes, definitely switch it back so you can see where you drew out your zones. Now, just remember, as much as there's resistance and support can become resistance, and a new support can be created. Did I say that right?
Once
Resistance can become support, and there can be a new resistance.
Yep.
And support
what
can
was
become
one
resistance.
support becomes resistance.
Thank you. Yes.
And what's
Much
resistance
simpler.
becomes support.
She said it a lot clearer than what I was
Yeah.
mixing it up in my own mind.
Something's wrong with her today.
Clearly. But okay, guys, yeah. So I don't know why she did this to me. Right? So you can put zones into I don't want to click it. Okay. Here we go.
Mm-hmm.
So, you can say, oh my God, chart just has a bunch of lines, right?
What the line chart is better for
Plotting,
identifying.
yeah, your highs and your lows and your zones.
I use it to identify the N's and W patterns, right, my traders that are watching? Can't you identify the W's and the M formations?
Your shoulders or your
head and
bottoms.
shoulders. So right here, this is Cam right now. Right here is a perfect example of an M.
Yeah.
Head and shoulders, right? Head and shoulders, they hit here, went back, retested, hit here. Clear indication that if you had a support there, you knew that it tested 3 times, boom, hit, could try, boom,
They
did
can't
it.
see. You gotta
Did it.
move it with the mouse.
I'm sorry, I'm moving with my finger. It broke support right here. It broke support. Then what happens is, remember what a trend is like a story, right? You want to look, let me see, where is it?
You
I
want to
want
look
you
at the way the market is moving.
A trend is like your friend, right? You have to get to know them, right? You have to really get to know them. Because
I
the
wish you
story,
guys could see her face.
the story repeats itself. It's true.
Yeah.
This story repeats itself. So look at this. And this is what, when I started noticing, oh my God, look, my support, my resistance, it broke through here, right? Perfect M formation. Hold on. Let me take that off. All right, now, it broke the M formation here, right? We retested the previous support right here. And what happened, as we can see, if I move this here and change it to candles, woo! This is head and shoulders right here, guys.
Mm-hmm. Beautiful.
Hold on. Type it in. Go. Type it in.
In the name or the text? Oh. Object name is empty. I don't know what I did here. Your computer freaking hates me, man.
Here. Sorry, guys. Let me delete. Text. There.
And no, not like the shampoo head and shoulders.
Okay. Perfect M, right? Right here, because look. Head and shoulders, right here.
And you can see, guys, it matches up between your line chart and your candlestick chart. So when if you do like to chart them on the line chart, just switch it back to your candlestick chart so you can have a clearer picture of what the market is doing. We went into, this is the 1 hour, right? We can find a double bottom.
So enter your USD. Let's analyze it.
Hold on, I wanted to find a quick W on bottom. What happened here? Oh, no. See? I'm just scrolling and your computer does things.
So what happened? You erased everything?
No. That's the thing. I didn't erase anything. I started to move looking for a W.
Yeah. Wanna move over?
I don't know what happened. You guys are my witness.
She cannot trade on a Mac.
Hell no.
I mean, it's still the same format.
No, I'm sorry. If we did our live webinar on my HP, it's so different. I can navigate my HP like no other.
So I'm here.
But with Max, I stink.
Let me fix my trend line. Hold on.
Make sure it's right.
Hold on, guys.
So guys, just to write down about support and resistance, to make sure your support and resistance levels are correct, you want to make sure it touches 3 times.
All right. So here's the trend line. This is for last week, right? The market opened, right? Did you see the gap? I don't know if any of you guys are gap traders, but what's really important about gap is that where the market closed, it usually has to go back to retest where it closed. And people normally gap trade right here. So if you can see my arrow, this is where the market closed, on Friday. And this is where it opened. So a lot of people opened down right here. And then this candlestick closed right here. Okay.
But as she said, the second candlestick went up and retested where it was on Friday.
So you can actually put a take profit and a buy limit, right?
You can put a buy limit and set your take profit where the market ended on Friday.
Yeah. So right now, the market is not really going to be moving. Like, you're not going to be trading because right now it's the Euro USD right now. It's not.
It's about to go into consolidation for a little bit.
It's going to consolidate until the London session.
London, my favorite session.
I do not trade the London sessions
because she can't get up at 3 o'clock in the morning.
No,
it's sacrifice.
I don't trade the London session because I trade futures.
I know, and it makes more sense for you to trade the New York session.
Exactly.
But I like to trade the New York session when I'm at work.
Yeah, when you're at
work. But the London session, I can trade it in the comfortability of my own bed at home.
Okay, so this is my trend line that I created. So I'm big on where I look at my trend lines. I see how many times did it hit my support. You can call it your support, the floor. How many times did it tap to retest, and did it break? Right. It's very important when you're looking at a candle, right? When you're drawing your support resistance, to make sure when you make an execution that the candle previously did not close above or below your support resistance, depending on what direction you want the market supposed to move. Hope that makes sense to you. So for this instance, the market, it broke this resistance, right? It broke my trend line, okay? And it continues spiraling down, breaking multiple zones.
Beautifully.
Okay? Now, people could have put, when it broke this trend line, you're not going to enter the trade immediately. You're going to wait and see the next candlestick to see where does it go. Now, so you could have entered literally here, right?
Mhm.
Or midway of here.
Well, right,
Enter.
because look at this doji.
So you could
Wait, your
enter,
trend line is blocking it.
yeah, you could enter here, right? Midway of the second candlestick, right?
Mhm.
And you could have put in your take profit at the first end, the first support, right? This was previously support, was now support becomes resistance, and
you
now
have a new
this becomes the new support, right? So you can literally have a take profit here,
I don't know.
and if it continues breaking down, right, you would have your second take profit here. Now, who was to know, because no one's Houdini, that the market was going to go all the way here, right? I mean, you can look at, let's zoom out, right? And see this. And this is where the magic goes. These are why some traders are able to see this right here. Because this is telling a story, guys. Eventually, the market has to come down to the previous support, which it did. Look, guys,
all the way down
look
there.
what happened. Does this not look familiar for you? This uptrend and this downtrend?
It just reversed.
It
went
just
all
reversed.
the way up, broke its zones, created new zones. Okay. That's actually a large scale M.
Yeah. Yeah. So you guys could have been from this week and last week. You guys could have this week, if you were here 2 weeks ago, this would have been a perfect sell. Then it went up
Slightly. Not
Slightly.
even really.
But my point is right now you're not going to trade this. This is consolidating right now. You got to wake up like around 2:30 in the morning and see where the
Wake up
market
at 3.
is.
It doesn't do crap at 2:30.
Yeah. But
Wake
those
up
are
at 3 a.m.
Yeah, depends on what the person wants to look at.
Yeah. And
But
unless you
right
remember to
now-
examine the chart.
The euro
Wake up at 3.
should be looking with my supply and demand zones that I use, right?
It's going to go back up on it.
Right now, the
It's going to
euro
consolidate.
is looking at a buy zone, but you're not going to buy right now because it's consolidating right now.
And you want to wait for a confirmation. I'm sorry, I'm chewing. You want to wait for a confirmation. And for me personally, I like to wait 2 candlesticks. So, I'm sorry. Oh, you see, guys, I touched the damn computer and it has a mind of its own. Your
Go
computer
back.
is Satan.
To go back, this versus one. That's
Okay.
it.
All right. So, I'm going to move her trend line. Okay. Because I want you guys to see that each candlestick tells you a story. And there's so many different, I'm sorry, what's the word you call them? Like the hammer, the hangman, the doji.
The morning star, the evening
Yes,
star.
no. There's a specific name for those. Come on, I'm
Universal
trying.
pattern?
Yes, thank you. Sorry, I'm like out of whack today. But yeah, we're gonna go over them next week, if I'm not mistaken, right? We're gonna show you all these different types of reversal patterns, and once you know what they look like a doji, and once you know what they mean, you're gonna be able to know that that's telling you that the market is about to do something. Pay attention. If the market is about to go up or the market is about to go down, but either way, the market is going to do something depending on what reversal pattern you see and where it's at on the chart. But that's going to let you know, hey, something's going to happen. Pay attention. I like to wait for 1 to 2 candlesticks afterward to confirm the reversal pattern that I saw and then enter a trade. That's me personally, the way that I like to do it. I moved your trend line a little bit.
That's fine. So now, Melissa, you went over. So now we
Support
can.
and resistance. We did trend lines. I don't know if you want to tell them the points about the trend lines where it has to touch 3 times as well. Your fourth, if it breaks, that's. I don't want to steal your thunder.
No.
Or shine. But yeah, so you wait for it to touch 3 times and then it breaks. That's your confirmation that your trend line was even correct to begin with. But on your 4th, that's where I would go ahead and place my trade. Where'd you put the cheese? Over there. And I think the only last thing we're gonna do is channels.
Yeah. So you guys can make your own channels, right? And you can trade within a channel, or you can wait. And when you're using channels, some people use channels to determine if the market is going in an uptrend, a downtrend. People trade within the channels, meaning they will enter a trade here and they will execute the trade somewhere along up here, right? And vice versa. Or people trade channels for breakouts. An example, this would be a channel and they would be waiting for this breakout, and people would take advantage of this breakout right here, right?
Yes.
Channels can be trading along here, the support and resistance.
Channels. Sorry, my freaking choking. Yes. You can also trade channels, guys, during a consolidation period, because that creates its own channel. It has its own zone where it's going up and down and up and down and up and down, where it's staying in that zone. And like I said, if you trade in that channel, it's such a close proximity of what you're trading in that specific area that I've seen people just literally trade consolidations. And when you're trading a consolidation, you're literally, it's like 10 pips and done. Make 10 pips, get out. Make another 10 pips, get out. And depending on what kind of lot size you're using, and let's say you've executed now 10 trades an entire day, and on each 10 trades, you made 10 pips. Depending on your lot size, you're done trading for the day. You made your money, right? But now I can't tell you what to trade, when to trade. You, as an individual, have to find your style and what works best for you. Maybe you don't like trend lines. Maybe you don't like channels. Maybe you just like using support and resistance, or maybe you're confused about support and resistance, and it's much easier for you to spot trend lines and to set up your trend lines and your channels. These are tools. These are tools, right? Because not for nothing, we could draw out support and resistance and trend lines and channels, and you know what? We're like, oh, the market's going to go down, the market's going to go down, the market's going to go down, and guess what? You blinked your eye and the market shot up, and you had no idea it was going to do that, right? So that could either be, depending on what the market is doing, it could be a fake out or a breakout. And next week, or do you want to tell them the difference now? Should we just save it?
So we've been going out for this for a long time.
I know.
But I'm just typing some stuff here because I want to show you something, guys.
No, where you could please.
So if you're trading support and resistance, right?
Mm-hmm.
And this is support, and it broke your support. Your entry, let me type it in. I love to write that way, you guys. And these are just examples, okay? So people say, okay, if I'm trading support and resistance, it broke this trend line, it broke support, I would say, well, enter the candlestick midway of the second candlestick. But we're not going to use the second candlestick because this is just an example. When you're entering a trade using support resistance, your stop loss is going to be above your support, and your entry is going to, your stop loss is going to be above your support,
Your resistance,
your support, and then your entry is going to be below your support midway. Okay. This is more, trading breakouts or trading support and resistance. Now, this is either way. This perfect example worked out for a channel breakout or support and resistance breakout. So you literally had two confirmations of it, 1, 2, 3, and it broke out. Look at that. Sometimes it doesn't do on the third, but sometimes it does on the fourth. But look at this. It hit here. It tried. The buyers tried, right? They hit tapped here. They went up. The sellers tried again to bring down the price. It consolidated. They're unsuccessful. The sellers won here, and they broke through, as you can see, all the way until here.
And zone
this
levels.
Is where it closed on Friday. You see where it closed on Friday? Look where the market opened now. Look where the market is at right now. So basically, I'm going to draw a quick trend line just to show you if you were gap trading right now at this second, right? If you were gap trading right now, you would have made a profit right now. You would have put in your take profit and you would have made a small trade. Now, these are for, I'm going to type this now. For those of you that are interested, look at open about 4 currency pairs right now, right? And open different pairs and look at where the market opened and look where it's at now. 9 out of 10 times. Now, this doesn't work all the time, but it's very, very, very high, okay? Very high probability. So I'm going to put right here, gap trading, okay? For those who are interested in gap trading, send me questions. I mean, this is just a little glimpse of it. Obviously, I can go in more thorough in how to do it, but I can't sit here for 2 hours either. So these are just examples. Gap trading. This is an example of how to enter a trade at a breakout. So I gave you examples right here. These are some of my supply and demand zones. For those of you that are doing the assignments and are following with everything, you know, if any of you guys need this indicator, send me an email only. Don't overwhelm me with the Facebook Messenger. I'm not really on that too much. Just email me and I'll just send it to you guys. It just gives you, you know, an idea of supply and demand zones to really just help you out, you know. But this is how I trade, guys. If I trade the forex market, I mean, most likely tomorrow I'm going to trade with my futures and I'll probably put in a few trades. So what I'll do tomorrow is, let's see, tomorrow trade, I'll take a few trades and then I'll talk about them tomorrow on my Facebook Live and I'll go over it with you guys. But it is, what time is it right now? It's 10:40. Oh my God, we've been on this for a long time. But I'm going to end it here, guys. Wait. Meaning with this, we're going to go over the assignments and what we're going to be moving. Next week is going to be how we're going to be trading with moving averages. I'm going to go over what moving averages that I personally use. Melissa uses her own moving averages. I'm going to show you how moving averages, you can use them to your advantage with trading and executing trades with a higher probability versus losses. So I'm going to minus this right here real quick. And
I was just about to say, have we been talking to ourselves for the last 20 minutes? Oh, there we go.
There we are. We're like, where are we? So, okay. So, as I was talking about, for those of you interested in getting that indicator, I'll give it to you guys. It's no big deal. It's just to really help you with supply and demand zones. And remember, if you want to know about gap trading is pretty cool. That I do like doing. I don't mind doing it because it's not a lot of work. I don't got to sit there and look and really analyze too much about it. But I definitely recommend gap trading. Those of you interested, just hit me up on the Gmail, ForexChicks.com. ForexChicks@gmail.com. I'll definitely go over it. I'm sorry, I can't go over everything like the extent because this is just basically, we're just going over, you know, certain information just to help you guys, just educate you guys. This is free webinars. We do them every week. And, you know, I can sit here for 4 or 5 hours talking about gap trading or perfect, I don't know, entries and exits. There's no such thing as a perfect entry and exit. A lot of people do use that term, but, you know, if you're on the technical analysis and your proper tools, you can definitely execute trades with a high probability. So hit me up for the gap trading and for the supply and demand zones. If you want them, I'll send you that indicator. It's no problem. And next week, we're going to be going over moving averages, simple, exponential,
the 3 types of analysis, and Bollinger Bands.
Ooh, those are cool. I don't use them too much, but
no, I'm like, I don't even
honest.
know what indicators you use.
I have
That's
them.
how we don't share our trading stuff. But
Yeah, we trade completely different.
I don't use any indicators. I tried them. I tested them out. I particularly don't like them. Like I said, they're tools. So if you need them, use them. But they're tools. They're not 100%. Nothing is guaranteed in trading.
That's
so
right.
just because you're let's say your simple moving average is telling you something, and it's telling you the market's going to go up, and you place the trade to buy, and the market does the opposite. What are you going to say? Oh, my moving average. It's a tool. It's not anything, it's not 100%.
Yeah. So we hope you enjoyed the session. And like I said, hit us up if you want more information on gap trading
And I still have lipstick on. You guys see? I've
still has her makeup on. But I hope you guys enjoyed this session. I mean, we've been on here for, oh my God, an hour and 40 something minutes.
Oh, we're going to get in trouble.
But I can't wait for next week because I like more hands-on chart trading. I don't like really chatting too much, but
yeah, it's much easier to show you guys live
tried.
trading. But we had to go over some of the basics for our new viewers. And definitely, if you're new, go back into our previous videos.
Watch our previous videos.
First round, we definitely took the time to sit and really explain everything.
Yeah.
This time around, we have to move through it a little bit faster.
Yeah. But next week, like we said, she showed you what we're going to go over. Make sure you...
Plus more.
This is the homework. So make sure you guys are writing this down because I promise you, for those of you who are new, don't use moving averages, don't use Bollinger Bands.
Bollinger Bands. We're just dyslexic and we're a bunch of stuff today.
It's simple and exponential. I'm telling you, when I go over that next week, you're going to really be like, oh my God, this is pretty cool. That I really like a lot for Forex.
I like analysis. I like Bollinger Bands. I don't use them, but I like them.
They're really good if you know how to use them properly. I know how to use them. It's pretty simple. I can explain it definitely in one session, but I just don't use them. There's so much things you can use.
That we don't use. Literally, but
definitely.
We'll teach them to you so that you can decide what works best for you.
Yep, and that's it, guys. So we're wrapping it up. If you want, if you want to know what platform we're using, also email us.
Yes, definitely. I know we've gotten a few people that have asked us, what platform are you using? Because not for nothing, it's great to learn, but if you can learn while you're earning,
at the same time, it's also good.
So
we'll definitely keep in touch, guys. And it was a great time going over this stuff with you. Take care, guys. Have a good night.